Hello, future investors. Welcome to a journey that could change your life. Have you ever dreamt of watching your money grow, even while you sleep? Imagine waking up to find your wealth has increased overnight. That's the magic of investing. It's like planting a seed and watching it grow into a flourishing tree over time. I'm here to guide you step by step into the exciting world of the U.S. stock market. Together, we'll explore the opportunities and navigate the challenges. Don't worry, you don't need to be a financial expert. This guide is designed for beginners, making complex concepts easy to understand. This guide is all about empowering you, the beginner, to take charge of your financial future. You'll learn how to make informed decisions and grow your wealth. Many people find investing intimidating. They see it as a complex world filled with jargon and risks. They think it's only for the wealthy or financial gurus. But let me tell you, that's simply not true. Investing is accessible to everyone. But let me tell you, that's simply not true. With the right knowledge and tools, anyone can become a successful investor. Investing is for everyone, and it's never too early or too late to begin. Whether you're young or old, there's always a way to start. In this guide, we'll demystify the world of investing. We'll break down the basics and make it easy for you to understand. We'll explore the basics of stocks, how they work, and why they are a powerful tool for building wealth. The power of the U.S. stock market, and how it can be a game changer for your financial future, and how you can get started even with a small amount of money. You don't need a fortune to begin investing. Get ready to embark on a journey towards financial freedom. Remember, knowledge is power. The more you know, the better decisions you can make. By understanding the fundamentals of investing, you're taking the first step towards securing your financial well-being. It's a journey worth taking. So, are you ready to dive in? Let's go! Together, we'll unlock the potential of your financial future. Now let's answer a fundamental question. What exactly is a stock? Imagine you want to own a piece of a big company, like Apple or Amazon. These companies are massive, and owning even a small part of them can be exciting. A stock is like a tiny slice of ownership in that company, called a share. Each share represents a fraction of the company's total value. When you buy a stock, you become a shareholder. This means you have a stake in the company's future and its success. This means you have a claim to a small portion of the company's assets and profits. Pretty cool, right? If the company does well, you benefit too. Companies sell stocks to raise money for things like developing new products, expanding their operations, or hiring more employees. This influx of capital helps them grow and innovate. The price of a stock goes up when more people want to buy it than sell it. This demand can be driven by various factors, including the company's performance and market trends. This is often driven by good news about the company, like strong earnings or exciting new products. Positive developments can attract more investors. On the other hand, if more people want to sell a stock than buy it, the price goes down. Negative news or poor performance can lead to a decrease in demand. Investing in stocks is a long-term game. It's important to remember that the stock market can be volatile in the short term. While stock prices can fluctuate in the short term, over the long haul, the stock market tends to go up, reflecting the growth of the overall economy. Patience and a long-term perspective are key to successful investing. The U.S. stock market is like the superstar of the investment world. Why? Because it's home to some of the biggest and most innovative companies on the planet. Think Apple, Amazon, Google, and Tesla, just to name a few. Historically, the U.S. stock market has delivered impressive returns to investors. While past performance is no guarantee of future results, the long-term upward trend is undeniable. Investing in the stock market allows you to participate in this growth and potentially build wealth over time. Another advantage of the U.S. stock market is its liquidity. This means it's easy to buy and sell stocks quickly. This is important because you have flexibility and control over your investments. Remember, investing in the stock market does come with risks. But by diversifying your investments and taking a long-term approach, you can mitigate those risks and position yourself for potential financial success. Ready to take the plunge and start investing? Great! The first step is to open an investment account. Think of this account as your gateway to the stock market. There are many reputable brokerage firms out there, both online and traditional. Do your research and choose one that aligns with your needs and budget. Some popular online brokerage platforms include Fidelity, Schwab, and Vanguard. Opening an account is typically a straightforward online process. You'll need to provide some basic information about yourself, such as your social security number and employment status. Once your account is open, you'll need to fund it by transferring money from your bank account. That's it. You're now ready to start exploring the exciting world of investing in the US stock market. Section 5. Making your first investment a step-by-step guide. Now comes the exciting part, buying your first stock. Let's walk through the process step by step. First, log into your brokerage account and navigate to the trading platform. Next, search for the stock you want to buy using the company's name or ticker symbol. Once you've found the stock, you'll need to decide how many shares you want to purchase. You'll have the option to place a market order or a limit order. A market order buys the stock at the current market price, while a limit order allows you to set a specific price at which you're willing to buy. Once you've placed your order, it will be executed by your broker. Congratulations! You're now a proud stockholder. Remember, investing is a marathon, not a sprint. Start small, learn as you go, and don't be afraid to ask for help along the way. Section 6. Diversification. Don't put all your eggs in one basket. You've probably heard the saying, don't put all your eggs in one basket. This age-old wisdom holds especially true in the world of investing. Diversification is key to managing risk and protecting your investments. What does diversification mean? Simply put, it means spreading your money across different types of investments. Don't just invest in one stock, one industry, or even one asset class. Instead, create a diversified portfolio that includes stocks from different sectors, industries, and geographies. You can also diversify by investing in other asset classes, such as bonds and real estate. By diversifying your investments, you're reducing the impact of any single investment on your overall portfolio. If one stock or sector performs poorly, the others can help cushion the blow. Section 7. Avoiding common investment mistakes. Even seasoned investors make mistakes, but as a beginner, you can avoid some common pitfalls by following these tips. First and foremost, understand that investing is a learning process. Mistakes are inevitable, but they can be minimized with the right approach and mindset. Don't invest money you can't afford to lose. This is crucial because the stock market can be unpredictable, and you don't want to jeopardize your financial stability. Only invest money you won't need for at least 5 years. This long-term perspective helps you ride out market fluctuations and gives your investments time to grow. The stock market can be volatile, and you don't want to be forced to sell your investments at a loss if you need the money in a pinch. Always have an emergency fund separate from your investments. Don't try to time the market. It's nearly impossible to predict market movements accurately, and trying to do so can lead to significant losses. Trying to predict when the market will go up or down is a fool's errand. Instead, focus on building a diversified portfolio that can weather different market conditions. Instead of timing the market, focus on time in the market. The longer you stay invested, the more time your money has to grow and compound. The longer you stay invested, the more time your money has to grow. Don't follow the herd. Just because everyone else is buying a particular stock doesn't mean it's a good investment. Just because everyone else is buying a particular stock doesn't mean it's a good investment. Herd mentality can lead to poor decision-making and significant losses. Do your research and make informed decisions based on your own financial goals. Understand the companies you're investing in and the market conditions that could affect them. Remember, investing is a journey, not a get-rich-quick scheme. It requires patience, diligence, and a long-term perspective. Be patient, stay disciplined, and focus on the long term. By doing so, you'll be better positioned to achieve your financial goals and avoid common investment mistakes. Section 8. Risk, friend or foe. Risk is an inherent part of investing. Every investment carries some level of risk, and understanding risk is crucial for making informed investment decisions. In general, higher potential returns come with higher risks. For example, stocks tend to be riskier than bonds, but also have the potential for higher returns. It's essential to assess your own risk tolerance before investing. How much volatility are you comfortable with? What's your investment time frame? If you're risk-averse, you might consider a more conservative investment approach. If you're comfortable with more risk, you might allocate a larger portion of your portfolio to stocks. Remember, there's no right or wrong answer when it comes to risk tolerance. The key is to find an investment approach that aligns with your personal financial goals and comfort level. Section 9. You can do it. Congratulations on taking the first step towards becoming a confident investor. Remember, investing in the US stock market is a journey. There will be ups and downs along the way, but by staying informed, diversifying your investments, and avoiding common mistakes, you'll be well on your way to achieving your financial goals. Remember to start small, invest consistently, and don't be afraid to ask for help from a financial advisor if needed. The most important thing is to start investing today and watch your money grow over time. You've got this. The power to create a brighter financial future is in your hands.